Hey everybody, Chuck Barone. Friday, August the 25th, 2023. It's officially St. Jerome Day. Yay for Powell. He gave his little speech this morning. I was up at the crack of dawn waiting for it. And he didn't disappoint. Market reacting positively to it. I'll go through a big interpretation of what I heard right after we do a quick report. But before we get started, let me welcome everybody to the show. As always, thank you guys for your support. You guys watching these videos and keeping the show going, it means the world to us, guys. We're truly grateful. All right, so let's talk about markets today. Well, we all know Powell gave his speech right at the market opens here Pacific time, 6:30. Powell came out right around 7 o'clock, started his spiel. The market was kind of waffling when it started, but started up and finished up today. So the stock market taking Powell's message in a more dovish than hawkish tone, kind of feeling a little more optimistic today than they did yesterday, obviously. So the Dow jumps today, 247 points the Dow rallies, 34,346 on the Dow. The S&P goes up 29 points today, 4405 on the S&P, and the NASDAQ up 126, 13,590. So a pretty broad rally today. Nothing colossal or anything, but a nice day for the market after yesterday's debacle. And all things considered, a decent day for equities. The bond market, though, getting mixed messages, I think, from Powell. So you had a little weirdness in the market today. The 10-year sits unchanged, 4.24%, no real movement up or down there. For the 2-year, jumps 6 basis points, sitting at 5.08%. So the inversion now getting a little bit bigger again. More of a signal of recession than anything else. I was really surprised that the 10-year sat unchanged today. When you consider not only the Fed and the inflation picture, but when you consider the U.S. Treasury borrowing Brazilians of dollars, I think that would put upward pressure on those, but not today. Dollar today, not much, up very small, still up 104.20 on the index, over 104, good strong number for the dollar. Not much news there to report. Metals today with a strong dollar, mixed today on metals. Gold, small day, gold down $1.60, $1,914.80 for an ounce of gold. Silver actually rallies today, up 11 cents, $24.22 for an ounce of silver. So silver moving up now, getting closer to the $25 target. Gold right in range to get to the 2,000 number. These are numbers I think we're going to see relatively soon in gold and silver, especially if there's any apparent weakness coming in the dollar. Oil today rallies up $1.02, $80.07 for a barrel of West Texas Intermediate. I still think this is just a blip, a trading anomaly. I think oil still headed down. I would be surprised to see it not go down into its $70 to $75 trough, where it's been pretty much trading for a while now, comfortable. Spiked up to 86, coming back down. A little bit of a rally today. We'll see if it has any real power to stay. Bitcoin today, not much news on Bitcoin, up very small, $92, $26,045 for Bitcoin. So all in all, just a kind of big nothing burger kind of day. I really thought that we would have the real volatility with Powell's speech today, and I'll go over the details of that here in a second, but the market's just not really reacting much to it, and if they did reacting in a positive way. Okay, let's see what happens next week. You know my opinion on this stuff, guys. It's this whole perfect landing, Goldilocks, everything's going to go perfectly scenario. I'm just not buying it. But anyway, let's talk about Powell's speech, because that was the big event of the day. The big event of the whole week, actually. So Powell, I was joking. I said Powell should change his last name to Walenda, because what he did today was walk a tightrope between the hawks and the doves, and did his best to give everybody exactly what they wanted in this speech. Okay, it was different, right? So The hawks, myself in this camp, heard that the fight isn't over. Might be more hikes needed. Prices and jobs are still too hot. Real estate prices way too high. On and on with negative stuff. At the same time, the doves heard only the good news. Inflation's coming down, encouraging signs. Real estate is a lagger, so that real estate rentals have been coming down. That'll help bring inflation pressure down coming. He told us, it's just crazy how people got whatever they wanted. The soft landing scenario, the idea that you can raise interest rates from 0 to close to 6% without causing any kind of real economic disruption is just, I got to see it to believe it. It was a fascinating speech, it really was. I think that, like I said, Powell was doing his best to try to convey the message that this inflation fight is far from over, guys. Now, you want to lower inflation from 3% to 2%. That's a 33% reduction. That's a huge number. And that doesn't do anything to address where prices are already elevated from where they were. So the idea that we're going to be all happy if prices only are increasing by 2% a year, which we will be happy about that. But the starting point for that 2% is going to be significantly higher than it was before the inflation started. So people are going to remain unhappy. I don't care what they say. If Powell came out today and said inflation was 0%, nobody would believe him, because they're not seeing it in the supermarket. They're not seeing it at the gas pump. They're not seeing it in their power bill. They're not seeing it anywhere. Prices actually coming down. They see prices just not going up as fast. And then what happens is they kind of stagnate like gasoline. Okay, it's here, and then boom, it jumps. And that's what they're seeing. So how on earth are you going to convince people that we're winning this fight? But they're going to continue to keep on trying. Now, I think Powell did his best to try to let us know that this fight isn't over. But he tempered the speech in such a manner to try to not spook the market, especially after the way they tanked yesterday. He was trying to have it both ways, I guess, right? I think Powell understands, like we do, like I've been telling you guys, any bump in the road, and if we're traveling back down to 2%, going to force them to revise the whole plan. Okay, and we know so many things are happening in this world right now that could cause that blip, for lack of a better word, on inflation. I mean, if you consider all the factors of what could happen, what could go wrong to upset this inflation apple cart, well, it's my educated guess that we're going to be confronted with one of these, whatever you want to call it, anomalies or breakdowns or setbacks or whatever they're going to be. Look what just happened last month. Okay, we went down to 3%. Everybody was happy. New CPI comes out 3.2%. Nobody batted an eye at it. But guess what? And that means inflation's not coming down. It means it's going back up. So we'll see what the numbers look like this week. The core number is still high. The PCE number the Fed talks about, that's their gauge. Core inflation 4.7. So they're nowhere near where we need to be. But the stock market today acting like if the fight's over, we win. It is not, man. It is not. Consider this, guys. Okay? You're going to have all of these factors converging at the same time. You're going to have election year pressure, right? The politicians, the Fed's loathe to force a recession, force a big surge in the economy in an election year, right? What else did I say here? You're going to have, of course, bad politicians talking all kind of crazy shit. Not to mention these same geniuses who are going to upset these markets. Bad policy coming from the same people. You got China, and in the international situation, China looking like they're going to have not only a recession, but could be a huge deflation coming. Could be. We'll see. China, that's a whole nother day's story to talk about that. But let's not forget about the pressure on the regionals and the banks. Commercial real estate set to collapse. Residential real estate struggling, especially with housing being so pinched right now. There's nothing available for people to buy. And let's not talk about the elephant in the room, the Fed's QT. So at the same time, we got the U.S. Treasury flooding the debt market. $1 trillion in treasuries sold just since the debt ceiling deal. 600 or 700 billion more to be sold this year. I mean, we're talking almost $2 trillion into this bond market. At the same time, the Fed's pulling billions of dollars out of the market. Of course, the government flooding it with way more than the Fed is pulling out. But, you know, this is incongruent, right? You got conflicting policy here, where the Fed's tightening, the government just spending like drunken sailors, borrowing money to do it. Well, when you got big borrowing in the market, that causes rates to spike. I don't know, guys. It's just all so silly right now. I would not want to have Powell's job, man. He's probably got the worst job in the world. The Republicans, the Red Party, the Red Team, already hating this guy. As soon as they get the chance, they're going to dump him if they have the opportunity to dump him when his term is up. If he has to be reconfirmed, I'm sure that'll be a fun hearing for him. The Democrats already were freaking out about him. When you talk about, especially the hard left Democrats, the Elizabeth Warren contingent, about how, you know, inflation should be forget inflation, focus on the economy, right? I don't know how much Powell makes, but it's not worth it, right? And a couple other little things that I saw this. Biggest outflows in almost half a year from equity funds. Just this week, $11.7 billion pulled from equity funds in the U.S. This money is going to savings accounts and money markets and higher yielding CDs. People can get 5.5. I saw a CD, 6-month CD over 6%. People can get that money risk-free. They're taking their money out of the uncertain stock markets, going to these more fixed rate stuff. $11.7 billion just this week. University of Michigan Consumer Sentiment Report comes out today. Falling hard. Now well below 70. 70 is the Mendoza line between positive and negative. So the consumers have spiked up. Big rally. July actually was the high. Now right back down, cratering out today. Consumers feeling more negative. Not so much about recession. That's not what they're worried about. They're worried about inflation. Still seeing inflation sitting a year from now, 1 year from now, seeing inflation sitting at 3.5%. Well, if it's only 3.2, they're actually seeing an increase in inflation over the next year. If that's the case, if the consumer's right, what do you think that'll do for interest rates? Is the Fed going to be cutting interest rates if inflation's not coming down? You think they're going to be raising interest rates to try to bring it down further? It's going to be a fascinating thing to watch. You know, the Chinese have an old proverb, may you live in interesting times. Wish granted, guys. We are living in these interesting times. I'm telling you, 25, 30 years from now, they're going to study this in economics classes. We'll see what the verdict is for what these guys are doing. But I'm telling you guys, batten down the hatches, man. You know, this fight is far from over. The idea that we're going to win it this easily and all they're going to do is just have to simply raise rates and the economy is going to chug along and there's not going to be any pain, really pain felt anywhere except for mortgage brokers and real estate agents. It's a fantasy. Anyway, that's it for the weekend. That's it for the week. Powell today. Try to watch a little of that or at least read a little bit about some of the transcript. Fascinating stuff he said today. We'll have a little more of that for you guys on Monday as I get into more details, going through what he said exactly. When you're listening to it, it's a little different than actually reading the transcript where you can take notes, better notes at least. So anyway, good weekend, everybody. Get out there, relax, spend some time with your friends, your family, people you care about and love. Get away from all the madness of the stock market, the government, elections, politicians, and all the crazy stuff. Enjoy a little bit of NFL the last week of the preseason here. My beloved Bills, man. We'll see. Preseason over. They say Josh Allen's going to play tomorrow. I'd be surprised if he plays for more than a series. I think if the offense would have played a little better last week, he would not be playing. So anyway, great weekend, everybody. Until Monday, we'll be back to bring you guys, and let's set this whole new week up and see where we're going as we head toward the end of the month. Until then, have a great weekend. Take care. Thanks.